morning. Welcome to IG's early morning call. It's June 29th. Let's take a look at what's happening on this Thursday as we look to a mixed start across the European equity markets today. We're following up on what's happening on the foreign exchange markets with the dollar basket at a two-week high after the meetings in Sintra. The Portuguese meetings have been held by the European Central Bank on the central bank forums this week. And there's been some interesting commentary about interest rates, and the general expectation is that the market should continue to realize that the central banks think that inflation is not over and that more interest rate rises are to come. Now, we got gold falling below that key line of support I've been talking about at 1910. The next line to watch out for, 1870. As a result of all this, the euro continues to be in focus today. We've got a drop on the markets for the euro against the US dollar, as we'll see in just a few moments' time. We've got German CPI expected to accelerate further, putting further pressure on the European Central Bank to raise interest rates as well. Meanwhile, US earnings. It was a good night last night for Micron Technology, the stock up on the session overall. Once again, the focus on AI. All about Nike tonight after the closing bell. We'll get earnings through from the stock. All sessions on the IG platform. And we will be looking for quarterly earnings out from the sportswear manufacturer after the close tonight. So let's take a look at what's happening. We continue to see volatility drain out of the markets, and we've hit new lows not seen since February 2020 in the last few days. And today we're building on that at 1544. So one would expect money to go into risk assets. Well, not so for the European markets. It was a third day in a row of gains on the 24-hour markets yesterday for the London FTSE 100. But today we've got a drop at 74.92. Want to take a look at what's happening on the continental markets as well. Same sort of price action after yesterday's recent highs. We're talking only a week or so highs, but we've got money coming off the table as well, again on the German and French markets today. Renault, one of the stocks to watch this morning, could be a positive twist to the overall performance at the start of today's European session at the top of the hour. We'll be watching out for that. After some good earnings news out, we'll get some of that in just a couple of minutes' time. But broadly speaking, same sort of price action after yesterday's gains. We got money taken down on the French CAC 40, expected at the start with a slightly lower open to the trading day today. Overnight in the Asia Pacific markets, just a quick wrap of what we got there with the Nikkei gaining, but only by a small margin, but losses across many of the Chinese markets today. S&P ASX 200 also down, but only by the smallest of margins. Wall Street closed yesterday. It was a good day overall for techs, where we saw the Dow and the S&P 500 see some declines, but only fractionally on the S&P 500. But money continues to go into these technology stocks. I want to show you that rise in a 0.25% yesterday and how the markets are looking on the 24-hour session yesterday with that green candle there. And we're consolidating at the highest that we saw as at the close yesterday. If we can get above the 15,266 level, then you're then back to levels then not seen since January 2022. But the market's looking strong going into the start of the day's trade, potentially at 14,976, a little bit of a gain on from yesterday's cash close. So after 3 days of central bank meetings and speeches at the ECB forum in the Portuguese capital, so I should say the Portuguese town of Sintra, the markets can agree that rates have not yet peaked and cuts won't come for some time to come. So the Sintra meetings showing us with all sorts of expectations that rates are still going to rise. Just thought perhaps I'd run through some of the commentary. For Jerome Powell, policy hasn't been restrictive enough for long enough. Christine Lagarde, the head of the European Central Bank, said it's not seeing enough tangible evidence of the fact that underlying inflation, particularly domestic prices, are stabilising and moving down. Andrew Bailey, Bank of England governor, was somewhat more cautious. The BOE governor said the bank would do what is necessary, but it remained to be seen if market bets would prove correct. They've got a number of further increases priced in for us, according to Andrew Bailey. But he said my response to that would be, well, let's see. We've got the Fed, ECB and Bank of England agreeing, broadly speaking, they don't expect a recession. But I think it's worth looking at what's happening in terms of the moves on the currency markets. And for that, I want to bring up the dollar basket first of all to show you what's been happening with this move up that we've got. In today's session, we're back up above the 100-period moving average at 102.79. And what this means is it means that we've got money coming out of other currencies. You can see second day in a row of losses for the euro-dollar trade, down at 108.91. Sterling is also weaker against that stronger US dollar. Big declines yesterday, taking us back down below what had been support at 126.79. That's now become resistance again, currently trading at 126.18. The big runaway winner that we've seen is the dollar against that weaker Japanese yen. The Japanese central bank must be wondering what they can do to stop this, short of intervention. 144.63. This market now up at new levels not seen since the 10th of November last year. But this strength in the this strength in the dollar trade means that we've got money coming out of gold. And you can see we've sunk below this Fibonacci line of support at 1910. That's 61.8% retracement. We've now got pretty much the entire candle today below that, currently trading at 1903. My next price target now is 1870.4, the 76.4% retracement. And then we're on to the 200-day moving average down at 1858. And the total retracement would take us all the way down to 1804. And I'm thinking now that could well be my new price target down here with those losses on the gold price continuing to mount in the face of that stronger dollar. Now, in Australia, retail sales out today have come through with a positive surprise, and we've seen a little bit of an unwind of the negativity we've seen for the Australian dollar as a result. Retail sales rising 0.7% in May, month on month, and that beat forecast of a 0.1% increase. Year on year, sales are up 4.2%. This consumer resilience is not what the Reserve Bank of Australia wanted to see. The RBA is set to decide on interest rates next week, next Tuesday. Prior to this retail sales data, futures implied a 27% chance for a 25 basis point hike. Well, that's now 36%. And 3 of the 4 major domestic banks are counting on an increase. I want to show you what's happened with the Aussie against the US dollar. Yesterday, a big strong candle on the way down, taking us below the 61.8% retracement. A little bit of money going in today, but I don't think the downside is over, to be honest with you. That green candle, for me, is a very weak candle. With that high on the wick on the upside, I think that for me indicates that there are more sellers than there are buyers, despite the fact we're up on the session at the moment. I've got a price target down here at 65.62, which is the 76.4% retracement on this move from the lows we had back on the 31st of May. Still more news on the macroeconomic front to come through. We've got CPI in Germany out a little bit later on today. Consumer price index is forecast to rise by 6.3% in June year on year, up from the 6.1% recorded for the year through to the previous month, and supporting the ECB's opinion that the fight against inflation is far from over. Meanwhile, in the States, we get the final reading of the US first quarter GDP growth rate. Economists anticipating a 1.4% growth Q on Q. Initial jobless claims forecast to rise by 265,000. And a bit later on today at 3 o'clock this afternoon UK time, pending home sales in the States are seen falling 0.5% month on month, down 17% year on year. So that's home sales falling at a rather startling rate in the US economy. Let's take a look at something else now on the markets and switch the gear into some of the corporate news headlines. We got some breaking news just a short while ago from Moonpig. I think things are looking pretty good at the online card retailer. Moonpig revenue up 5.2% year on year to £320 million. Adjusted EBITDA up 12.4%. Let's take a look at the share price chart for Moonpig. In the long term, just bring it up to full screen and I'll give you a longer term picture here for Moonpig. You can see we're well down off the highs that we saw going into the highs that we had for the COVID peak that we had, over £5 a share. We're opening at 136.8 today, but you can see that we've gained 33% from the lows that we had back on the 23rd of March. So this is the rise that we've seen. In fact, we have been higher than that. But we're opening at 136.8 pence. Gross margins up 6.8 percentage points to 56.1%. So I think, broadly speaking, these numbers look good. They're certainly making more profit per pound they're putting into the business. The company says they've got a successful integration of Greets recently, joining the brands, including Red Letter Days and Buy a Gift. And I think, broadly speaking, these are looking good numbers out this morning. The only question I'd have, going back to price action, we saw that strong day yesterday at 136.8, closing out at that level. My question is have we seen all the upside on from what is essentially a pretty good number out this morning? We'll have to see how things go. If you are long on this going into the start of today's trade, I'll put my stop down below the 130 level. If you're long going into Moonpig trade at the start of today's session at the top of the hour. Let's keep on the charts, and I want to bring up a chart of Renault, the French automaker. We've seen this double bottom we've had here over the last few weeks or so, and we've come up out of that. We've already, if you measure the height of that double bottom, we've already successfully gained all that. We're opening at 36.48. I want to bring the share price chart up because we've seen some headlines coming through from Renault this morning. It's raised its full year operating margin target to between 7 and 8%. This was last quoted at 6%. So that's a potentially positive stock story at the start of today's trade. 36.48 is where we open there. Price target, if you're long on this, at 37.70. Stop goes below recent price action. So that's where we are in terms of what we've got in terms of some of the European stocks to watch out for at the top of the hour. Let's take a look now at what happened late last night on Micron Technology, which produced earnings for its fiscal third quarter numbers. Shares rising in extended trade after the chipmaker's third quarter earnings and sales beat expectations. Let's take a look at the figures as we saw the break last night. Posting a loss of $1.43 per share compared to expectations of $1.59 loss. Revenue came in at 3.75 billion. We've been looking for 3.67 billion. So that was more positive than had been anticipated. The chief executive said the recent acceleration in the adoption of generative AI is driving higher than expected industry demand for memory and storage for AI servers, of which Micron is benefiting, while traditional server demand for mainstream data center applications continues to be lackluster. The market also noting an improvement in pricing trends as excess inventory continues to shrink, suggesting that the industry is now past the bottom for growth and revenue. Let's take a look at the share price chart for Micron. As of the close last night, you can see clearly the response we saw. It's an all-session stock, so that is where we closed out yesterday's all-sessions stock at 69.13. So we are expecting a start at 2:30 this afternoon UK time when we see the US markets get underway on Wall Street. One major problem subsists. Micron is stuck in the middle of a US-China technology spat. Last month, China's cyberspace regulator failed Micron's products in a security review and barred purchases by operators. I suspect that is something to do with a political problem rather than a manufacturer's problem for the chips produced by Micron. We'll have to see how that develops. But nonetheless, it saw a positive result in the session yesterday, ending at 69.13. Let's take a look now ahead to later on today, because after the closing bell tonight on Wall Street, we've got numbers coming out from the sportswear manufacturer Nike. It's another all-session stock to watch out for. The street expects earnings of 68 cents a share on revenues of 12.58 billion. But more than earnings, it's an update of the group's strategy that investors are going to be most interested in. Nike has made a big case of squeezing out the middleman, wholesaler, and opt for direct consumer business. Last quarter, direct consumer revenue represented 42% of the total revenue produced at the company. Let's show you the all sessions trade on this stock. We ended up all sessions last night above the 200-day moving average at $113.26. But like Micron, China is another concern for investors in Nike. It's a huge market for the brand, as we could expect, and many expected a strong, solid rebound in sales in the reopening of the country in China at the beginning of the year. But that hasn't happened. Last quarter revenue in the region rose by only 1%. And that was a bit of a disappointment. So watching out for all this after the closing bell tonight. It opens at 9 o'clock this morning. All sessions on the IG platform at $113.26. And you can trade this after the bell this evening. Let's take a look at some of the commodity news headlines. I want to begin, first of all, with a look at what's going with crude oil and what happened late yesterday with the EIA crude oil inventories. We saw an increase in exports, sent crude oil inventories down 9.6 million barrels. Gasoline stocks rising by about 600,000. Also, we saw distillate stockpiles rising as well. I think I want to take a look at what's happening with the US crude chart on an hour-by-hour basis. And you can quite clearly see, if you look at this chart, the big candles that we saw when the EIA report was released. When you get a drawdown in supplies, it means that it restricts the amount of oil in the market, which obviously pushes the price up. The problem is, if you look at the context of all this and where we are now, we've seen a stalling of the gains that we've seen. And in fact, the gains were not as big as the losses that we saw the previous day. And that was a new recent lower low as well, intraday yesterday. So I think it's more than likely, from a technical point of view, we're going to get a break of this line at 66.95, than a break of the falling line of resistance that we got up here. A break of that would be 72.45. So you can see that I think the direction of travel is very much down. And I suspect we're going to get a break and a candle close below the 66.95, in which case you'd then be short on the way down to 63.76. So Brent and WTI rising on the news, but I think, as I said, the longer term picture. One analyst comment on Reuters this morning: if anybody's going to rain on the bull market, it'll be Jerome Powell. The only negative thing we're seeing is that there's still concern about the Federal Reserve slowing the economy, and the fears are concerns about a potential recession, not just in the US, but in the Eurozone and in the UK and other big users of oil. And if that happens, there's a potential for further downside in the price of crude. That's it. We've got about 15 minutes before the start of today's European session. Do watch out for Moonpig at the start of today's trade and possible uptick, as I said, as well in Renault stock on the French markets this morning. Two stocks to watch at the beginning of the session. At the top of the hour, we are still expecting a mixed start to the trading day outside of those two major headlines this morning coming through from the corporate world. I say major. They're not major stocks to watch out for, certainly not Moonpig, but Renault could be interesting in the auto space. We're back at 10:30 with Charting the Markets.